Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor who you can find online at SteveSaretsky.com. Welcome back to the show, Steve.
Yeah, thanks a lot for having me on.
Steve, is the coronavirus scare likely to have, or is it having an impact on Vancouver real estate?
Well, I think it's certainly going to have an impact on a lot of markets. Certainly the buzz. Anyways, I mean, I think Air Canada just shut down their flights to Beijing and Shanghai. So obviously, particularly over Lunar New Year, that's generally a time where, at least in the industry, as people say, okay, well, it's, Chinese New Year, they come overseas to Vancouver or wherever global city, and they purchase a piece of real estate and then they kind of go back. At least that was, particularly the case in 2015, 2016, and, into 2017. So I think there was definitely some optimism, amongst developers here and stuff. We certainly saw, a lot of the marketing was geared towards Chinese New Year and, offering special incentives and whatnot. So I think that, obviously with air travel likely being down, it would impact that. And I think anecdotally, I would say that seems to be the case.
And of course, when people are scared, they don't like to wander around where they might run into other groups of people, do they? Yeah,
exactly. I think that seems to be what everyone's kind of scared of that right now. So, I think it's pretty, it's definitely not, if I was selling a whole bunch of condos, condo building, as a developer, I would certainly not be too happy with the timing of everything. But, that's kind of the reality right now.
Yeah. They even found a suspected coronavirus person on a cruise ship, so now people won't be taking cruises.
Yeah, I saw that. Lots going on. Kind of scary. I mean, you hear kind of mixed reports on it in terms of the severity, but certainly seems to be impacting travel. I mean, it's actually, China's annual Chinese Lunar New Year. I mean, it's the single largest migration or travel, I should say, in that period of year every year. I think it's something like 6 billion people.
800 million.
Yeah, okay, sorry, 800 million.
Yeah, sure? 600 million, 800 million. It's a lot of folks trying to jam onto the train and watch the documentary on it. It's, you think China being a communist state would be rather orderly, but people rush the trains trying to get the last seat and then they stand and, it's pretty disorganized in some places.
Yeah, exactly. It's,
and now, you see photos, Beijing's a ghost town. Nobody's going out, which, is probably for the good of everybody. Now, China's stock market in reaction to the virus is closed at least until Monday, February 3rd. Could this be a sign that all is not well with China's economy, or is it virus related?
Yeah, I think they tend to keep everything under a wrap, so it's kind of hard to tell, but I think that seems to be the wide-ranging consensus is that obviously it's going to have an impact on the, Chinese economy and, the broader economies in general, just having that ripple effect. So, kind of curious to see, how everything shapes up. But, I think as it pertains to at least real estate here locally, I think that some people, at least in the higher end luxury market, will be a little bit disappointed.
We'll have more with Steve Saretsky right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what's the latest on sales and listings for the Greater Vancouver area?
So right now it's sales are picking up. I would say we're looking kind of close to long historical averages for January. New listings remain chronically low. I think that's kind of that's probably the story, I think, heading into 2020 and moving forward, is just that for whatever reason, I think certainly it has to do with the function of low interest rates, but people basically are deciding not to sell their homes, right? So, for example, that could be people that maybe own a condo and they're upsizing to a house. I'm certainly seeing some cases here, and anecdotally talking to other realtors, it seems to be that instead of selling the condo to buy the house, you somehow scrounge the money to buy the house and you keep the investment condo because, again, when you're on a 20-year bull market and everyone's seen what's happened with prices, there's the prevailing belief that, why would I sell this? I'll do everything I can to try to keep that and obviously own as much real estate as possible. So yeah, the new listings, even from a national perspective, new listings are at the lowest level since 2007. So yeah, definitely that's kind of what's propelling the sort of resurgence, and I suspect that you'll start to see, price growth in Vancouver show up in the official metrics, probably pretty soon, at least in the condo market. And again, I think that mostly has to do with not some sort of flood of Chinese money coming out, but basically a symptom of low listings. And, there's basically buyers are sort of coming back to the table with interest rates at 2.79%. And, there's just not enough listings out there for them right now to bid on. And so you're seeing multiple offers in a lot of cases.
Are the banks becoming more liberal in their mortgage lending?
Yeah, I think that we can certainly see in residential mortgage credit growth that's accelerating again. Off obviously lows. You're also seeing the rate of growth in high ratio borrowing, start to increase. So after the stress test, it dropped off quite a bit, and it has begun to start growing again. Something that OSFI recently flagged in one of the reports as something that they are going to continue to monitor. But yeah, you're starting to see, I think, that people have sort of digested the stress test and the lending. There's certainly no lack of liquidity, let's put it that way.
Now, Vancouver and Toronto, two areas that see mass immigration every year, tens of thousands of people. Does that become an effect if they're not building a lot of new homes or people aren't selling? Does that add pressure and push up prices?
Yeah, I think so. Obviously the population growth, I think, are cyclical. A lot of that has to do with the strength of the economy, but, yeah, we're seeing, lots of inflow and migration, particularly in Toronto. Vancouver is kind of roughly on par with what it has been historically. So I don't think that's necessarily the largest driver, but obviously it is a, continuing influence on the market. But yeah, I just think that for whatever reason, I think the biggest story here is that people aren't listing. Again, maybe that's a change in the economy where, there's maybe some financial distress that maybe forced somebody to sell. I certainly don't see a scenario where we're going to see a sudden jump in mortgage costs. If anything, I think mortgage costs probably move lower, which is ultimately a function of the bond market. The yields have been plunging, obviously, because of this coronavirus and the scare of what it might do to, the economy and GDP growth. So,
are we seeing a jump in foreclosures? And if we are, is it hitting one particular area harder than any other?
Foreclosures are going up, albeit off pretty much of, a very low base, which shouldn't be surprising to anyone given how much prices rose and how low interest rates have gone. That, foreclosures obviously became essentially non-existent over the last couple of years. So they are definitely starting to grow. I think a lot of that's concentrated in the higher end luxury market, particularly in West Vancouver. That's been by far the hardest hit market. So that's kind of where we're starting to see the foreclosures, and the foreclosures are predominantly through private lenders, mixed, but not through large commercial banks.
Are the developers who concentrated on the high end, are they being hit by foreclosures because they can't move their high end properties?
No, not really seeing that. I mean, the high end single family is kind of where you're seeing the foreclosures, but not really in new condo development or anything like that.
We'll have more with Steve Saretsky right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what's a high ratio mortgage, and is it risky?
So high ratio is, I think it's 45%, 450% of their debt to income. And we're starting to see, I think after, I don't have the chart in front of me, but it was put out by OSFI the other day, basically just showing that I think that percentage obviously peaked prior to the stress test. You saw the number of high ratio borrowers drop off significantly over the last year and a half, and that number has basically looks like it's bottomed and it's been starting to grow again. Still below the peaks prior to the introduction of the mortgage stress test, but basically this shows you, people that are essentially, it's basically a metric to show people that are maybe stretching themselves to enter the housing market, that they are taking on, probably excess leverage, and so that the, banking regulators wanted to, put a damper on, and it looks like they did with the stress test, but now it almost looks as if the stress test is kind of like wearing off. So I think it's a number that everyone will be keeping an eye on.
Is the selling of homes by auction catching on in Vancouver?
No, it's not. I know there's some companies here that have tried to bring it on or bring it back, but or make it more mainstream here. But yeah, definitely not really seeing that.
Is real estate in Canada a likely target for increased taxation by the Trudeau government?
Yeah, I think that truthfully, I think that's something that I think is a strong, high probability, is maybe not necessarily just with the Trudeau government, but I think even from a municipality perspective, is that when, so much wealth and so much money is tied up into real estate, that it is a pretty easy thing to tax if you want to. Obviously politically it's a tough one to sell, but I think there's various ways to do it. And, we certainly saw, despite realistically a lot of values came down in the city of Vancouver last year, a lot of values came down, property values, but, the city actually increased the property tax, burden by, I think, about 8% or something like that. So, essentially, they just adjusted the mill rate to increase property taxes despite values going down. So, I think that real estate will probably be continue to be a center of attention, particularly for governments looking to increase their taxation.
In case we're experiencing a bull trap in the Vancouver market, what warning signs should we be watching out for, and what exactly is a bull trap?
What should we be looking out for? I mean, the bull trap's basically people that sort of think that you're about to enter into a new bull market, but it turns out to be not true, and you actually end up seeing prices fall lower. I mean, could you make that argument that we're in this now? I think, potentially. I think what it ultimately is going to come down to, right? Like in a normal circumstance, you would see central banks would see that asset prices are extremely elevated as they are today, and they would usually raise interest rates to sort of stem off that, those potential bubbles that are forming. But that's not the case today. Central banks are obviously continuing to ease monetary policy, pumping copious amounts of liquidity into the system. So I don't think that you're going to kill this bull market through higher interest rates. I think what's going to happen is potentially the business cycle comes back into fruition, and you start to see a slowdown in the economy, and through that you'll see job layoffs, and through that you'll see credit losses increase, and through that you'll see banks tightening their lending. So that seems to be like the something that I would watch for, is the only thing that is realistically going to kill a bull market and an end to a decade-long boom in housing.
Do you invest in real estate?
Yeah, so myself and some partners, we wouldn't say overly invest, but little bits and projects here and there. So,
Steve, thank you so much for chatting with us.
Thanks a lot, Jim. Thanks for having me on. I appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. You can contact Steve at stevesaretsky.com. If you have any questions for Steve or any other guest, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of House Street Media Incorporated.